I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin, the website oilandgas-investments.com. Welcome to the show, Keith.
Jim, God bless you. How are you?
I'm doing great. Oil prices down, well, we talk, but they've had a tremendous run, haven't they?
Oh, they've basically, up 80% from 26 to 46. So, yep, they've had a great run here in the last 6 weeks. Fantastic run.
And it didn't hurt people at the pump all that much either, because the Canadian dollar went up at the same time.
That's right. Here in Canada, we were insulated a little bit on the rise, you bet.
What's the outlook right now?
Well, what the market's telling us right now, I think, is that the whole market needs to take a breather. You know, when you have that big a run, you get a lot of speculative investors playing the oil market now, way more than ever before. So all these guys kind of have to get liquidated out, But the reality is that these hedge funds who have been buying up oil futures contracts are still at record high long rates. So they still think oil's going a lot higher. They have totally bought into the idea that production around the world is going to fall off enough that we are going to see $50, $60 oil this year. We don't know if that's true or not, but the reality is that it sure looks like, for now anyway, we're going to take a breather. It's funny, Jim, the analysts are all warning people, look, fundamentals just do not support higher oil prices from here, but that is not, the hedge fund guys are not listening to that at all. All the speculators, record number of contracts is, there's never been such a big dichotomy between the analysts' conservatism and the bullish hedge fund guys.
Why is that?
Well, part of it's just because analysts do get paid to be negative, and hedge funds get paid to be bullish, so they're making their bets. But I just think, Jim, right now, what we saw here just in the last few days was, just a huge amount of producer hedging at $46, $47 moving forward. And so the fact that was enough hedging to get in there to kind of stop this rally in its tracks, at least for a couple days, is a pretty strong sign that we're getting close to the near-term top, I think. Lots of U.S. companies have said at $50 oil, they are bringing rigs back. And that the production increases are going to start up again, or at least they're going to be able to hold production steady and not decline anymore. So it'll be really interesting to see. I'm guessing this coming week on the Friday rig count from Baker Hughes that we're going to see probably like a 10 to 15 increase in the number of oil rigs around North America. So we'll see what that does to oil here. Oil shrugged off a lot of bad news in April to have an incredible month. And, of course, so that was just bullish psychology, ignoring the facts. And so now psychology has changed. Oil's kind of peaked. It's starting to roll over a bit. So any bit of negative news now is going to have a much bigger impact than it would have 3 weeks ago. It might even be less bad than what we saw 3 weeks ago, but the psychology of the market's changed, so its stocks will go lower.
Are Canadians happier to see higher oil prices? I mean, the federal government, I'm sure, is.
Oh yeah, we got to be happier seeing higher oil prices for sure, just because it makes such a difference in the balance of payments for the country. It's massive. So we're very happy, or much happier with a higher oil price, because that also means a higher dollar. So all the tourism people get to go traveling. Obviously, for some of the Central Canadian businesses, they would love to see a lower dollar. It helps them out, and so that kind of puts them directly at odds with the oil price. But that's life.
Well, I think somebody said Canada's economy does best when the dollar is around 80 cents.
Could be. Yep, I have no idea, but that wouldn't surprise me at all. It's nice to have a little bit of cushion here in your competitors down in the States. though their productivity is quite a bit higher. So,
Well, it certainly helps the movie business.
mm-hmm.
And
a lower dollar. Oh yes.
And although while Vancouver is the TV science fiction capital of the world, they're going to be shooting the new Star Trek TV series in Ontario, but that's probably because the Vancouver studios are full.
Yes, I do believe the Vancouver studios are full. Yes.
Well, maybe we can teleport people back and forth. Keith, when you're taking a look at the long-term futures for oil, some people have said maybe in July we'll see $60 a barrel. Are they overly optimistic?
Well, honestly, Jim, you don't want to put a price target and a time frame in your prediction. That's just suicide. But I would say that there's almost a certainty here with the rebalancing that we're expecting in the second half of the year, that a little farther down the road in Q3 or Q4, we're going to see for sure at least a spike into the 50s. Are we going to see enough of a drop-off in production to see oil trade regularly in the 50s and get a spike up to 60? That, in my mind, would be quite surprising.
Has production from the frackers fallen faster than many people expected?
No, it's fallen way slower than anybody expected.
Oh.
Everyone thought, if you'd have said in November 14, when the Saudis decided to not cut their production, okay, shale production is going to fall how much? Everybody would have predicted it was going to fall off a cliff in the first 5 to 7 months, and it didn't. And so we're only down, you think the shale production in the States is around 5 million barrels. We're only down, just recently now, about 10%, maybe 15% from that number almost 2 years ago now, 18 months ago. So no, now it's starting to happen, but no, it's been very slow coming. And even now, Jim, it's only dropping 15,000, 20,000 barrels a week, which I guess you could argue, hey, that's 60 to 80,000 barrels a month. That's damn near 1 million barrels a year, and that is a lot. But on a week-to-week basis, considering how much production there is, it's not that much.
When you said you expected perhaps a few more rigs will go into production, would that be the first time the numbers have gone up this year, or in the past year?
No, I don't think so. I think there's been 1 or 2 weeks when the numbers have gone up, but it's pretty rare. I think something like 15 in the last 16 weeks they've gone down. So it's been a pretty steady number.
Also, with the rig count, rigs now are much more efficient than they used to be, say, just even a couple of years ago, aren't they?
Yes and no. Wait. I would say when people talk efficiencies, Jim, really what they're talking about is they've been able to do much longer laterals. So, when the business started out here 6-7 years ago after the '08 crash, in real earnest, you were only doing a frac stage every 200 or 300 meters, and now they're doing them every 30 to 40 meters, and they were only doing 500-meter laterals. Now they're doing 2,500-meter laterals. So it's there has been some increase in efficiency, but mostly it's longer wells, more fracs per well. So I guess understanding that you can put more fracs per lateral foot and more sand. So they're putting more sand in. So yes, those would be efficiency gains, I guess.
How brutal have the anti-fracking forces been, or have they really cut production?
Sorry, repeat that for me?
Well, you have so many places, municipalities, some counties or states saying we don't want fracking. Has that hurt the business?
No. Colorado just overturned. There's no local bylaws allowed to ban fracking. The state has complete control over that. Really, the only thing I can think of on that front, Jim, would be that the industry has become way more public aware of keeping their social license. So I think that probably they haven't been able to drill some areas like Swiss cheese that they thought they would as quickly. But for the most part, no. Local opposition has not really slowed down fracking at all.
We'll have more with Keith Schaefer right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band coming to West Vancouver Friday, May 6th at the K-Meek Center. Buy online and save at ontourtickets.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on a TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Keith Schaefer. Keith, you said natural gas storage is doing something that we've never seen before.
Never. What we're seeing here is, so natural gas injections happen during the summer, Jim. We inject natural gas into underground storage, and then we withdraw it in the winter. So we use a lot more than we use in the winter, and we use a lot less than we produce in the summer. So inventories go up and down on a very seasonal basis. And so the peak storage for natural gas is, you'd think just by definition this is true, and it is, that the week before we start withdrawing, when we've been injecting gas into storage for 6 months or 7 months, that's when storage is at its peak. But this year, something very strange has happened. Here it is, May 2nd, and we're already at peak storage, what we were at in the first week of November last year. And that's a large degree because we had such a warm winter in eastern Canada and the U.S., where really the only cold month was April. And just that the production out of the Canadian Montney Basin in particular on the Alberta-BC border has been so big that we're back up to full storage already. So when you're at full storage already, and so now we're going to test the limits of theoretical storage. We don't know exactly how much gas we can throw into storage, but we're going to find out this summer, that's for sure. And so what that means, Jim, is that the price for Canadian gas, which has already gone from like $2.50 to $1 a million BTUs, I think it's going to go no bid. Natural gas in Canada will go no bid this summer, for sure on weekends, and probably even a couple days during the week, maybe in August, unless we get a monstrously hot summer. And of course, the problem is that usually we could send a lot of gas to the States, but the Marcellus Formation has got so much low-cost gas that it's kind of kicking us out in markets like Chicago, the Midwest, even Ontario and Quebec have got new pipelines coming up from the Marcellus just south of there in Pennsylvania, and so Canadian natural gas producers are in trouble, Jim. Like for some of them, they've hedged and they've got commitments to ship their gas down the Alliance pipeline into Chicago, which is owned by Enbridge and Veresen, and the Alliance pipeline. Then it's not going to be quite as bad, but without firm service, if you're just trying to sell gas in the spot market out of Canada this summer, I don't know what you think you're going to do. I think you're going to be told we don't want your product.
Well, doesn't this really show the need to get LNG out of the country and to Asia?
Well, and here's the other potential kick in the pants that we could get is that, Petronas has kind of said, okay, by midsummer here we'll have decided whether we're going to go ahead with this or not. And of course, right now the LNG market globally is just oversaturated. It's got an unbelievable surplus. Gas prices are down at $4.50. Barely covers transport costs to anywhere. So really, because Canadian gas has for the last year and a half, 2 years, been a binary trade, a call on LNG. And if Petronas says no in July, plus we've got all this storage here, there's going to be an unbelievable amount of pain. Like you will see bankruptcies, you will see mergers, you will see, it's going to get uglier than you can hardly even imagine.
If we do hit the storage limit for natural gas, does that mean we're going to do the old thing and burn it off?
No, you can't do that anymore, Jim. That's way against environmental rules. No flaring.
So you just turn off the
You just turn it off. You got no choice. In fact, gas actually goes. What happens, Jim, is gas actually goes to negative pricing, and you've already seen that this year. You've already seen gas go negative pricing in British Columbia, where it's been, and I'm not just by a little bit. Sometimes it's been almost $1.50 an MCF negative pricing, where producers have had to pay to get their gas out. So, but that's only been on a very small hub called Station 2. But if that starts to happen on the main AECO benchmark, AECO, Alberta Energy Company, then it's an unbelievable amount of companies are going to feel severe pain, Jim. It'll be nothing like the patch has really ever seen before.
Well, besides company bankruptcies, what's the pressure going to be on the financial system that lent these companies a lot of money?
Well, yeah, it's going to definitely impact them for sure. So all these guys, and of course, then that just ends up exacerbating the situation. Generally speaking, Jim, the finance companies are actually very good at working with the producers because. Really, what can these bankers do? They say, okay, go sell assets. Well, you're selling assets into a market that's got no bid. So, what it does mean, Jim, is that you have to, as a management team working for a producer, you have to forget about your shareholders because your shareholders are going to get zero. Your stock is going to zero, and you just have to worry about your bondholders and your bankers because they're the only guys that are going to come out with any remote amount of money.
Well, I did see a headline that said, could your bank go bankrupt because of low energy prices?
Yeah, I don't know enough about who's got the serious leverage here amongst the Canadian financial institutions. Certainly down in the States, what's been happening is that the producers have had a lot of luck renegotiating their debt, and covenants basically get just, they use the word relaxed, but really it means wiped out. Like the banks just say, okay, do whatever you want, pay us whenever you can. So.
When you said more bankruptcies, that also means more mergers, more acquisitions?
Yeah, and again, like I say, what it means is that shareholders are going to get wiped out because it's going to be such a bad market, Jim, that they're basically going to just say, look, we'll take over your debt, and that's it. Or we're only going to, and you get, or maybe they don't even do that. They go to the lenders and say, look, we'll take over this debt, but you got to renegotiate it down 20%, and still the shareholders get zero.
Well, we have heard that investment in crude oil is at a record low and has been falling even lower.
Yes. So right now, we've still got some increasing production coming out of the Gulf of Mexico on long lead time projects and out of the oil sands, again, on long lead time projects. But certainly in the short cycle shale business, revenues and expenditures are way down. And the problem here, that what the oil bulls are saying is that, look, enough people have actually left the energy business now to make it very worrisome that they'll have all gone and found new jobs, and so the highly qualified technical positions that the industry needs to grow won't be there, and there'll have to be a whole new cycle of retraining.
Right, and as we know, it takes 1 year to be competent, 3 years to be really good at a job, right?
Oh, yeah. Well, yeah, there's a big difference in crew efficiency for sure.
Because it's a coordinated process. It's like a football team. You have a large number of people, maybe not as large as it used to be, but to make a rig work, they all have to be on the same page at the same time.
Yep.
Isn't that what they do right now? They do have a best crew system?
Well, I think all these companies, they know who their experienced crews are. So there's, like, right now, there's only the best crews are left. So if you've only been working in the business for a few months, you've been out the door now for a while. So, but yeah, it's basically a situation now where if we had to ramp up and bring in a lot more crews, I think that the industry would find it very difficult to meet the demand.
There are still pushes, of course, to get pipelines to the West Coast. Is it a dead issue as long as prices are so low?
Well, you'd like to think that when prices are so low, it would be a bigger issue because we need to get the absolute best price possible. The difference between WTI and Brent is only $1 or $2 right now, and people say, well, that's hardly worth it. Well, let me tell you, when profit margins are this slim, it really is a difference between profit and loss, and it would mean the difference between, laying people off and keeping people on. So it would be a big deal here. The new federal Liberals government here, they're making the right noises, but they're really, in my mind, Jim, just kind of talking out of both sides of their mouth. We'll have to wait and see if there's any real progress here over the next year. Certainly, they couldn't do any worse than what the Conservatives had done. Here we had a Calgary-based prime minister and who ended up not doing anything and alienating everybody. So there is some repair work to be done, so you can't expect something like that's going to happen right away.
Thanks for chatting with us, Keith.
All right, God bless, sir.
My guest has been Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin website, oilandgas-investments.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Check out our YouTube channel, Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.